Hello, Ziegfried here from Cloud-Based Services Accountants. A sunny 4th of May 2022. It's unbelievable, the weather. It feels like summer. But yeah, I don't complain. So we got a call from a client and just want to clarify. They trade as a company or in a company, and they've paid themselves, or the person paid himself as shareholder salary, where PAYE is deducted. And at year end, suddenly there's more tax to pay. So there's additional, obviously, profit declared in the business, and he needs to pay extra tax. So that was quite a concern for the client. And I thought the best practical way to clarify this and explain this is to share my screen. And I usually obviously explain all these things in Xero. So let me quickly share my screen with you and then explain the reason why you might have to pay extra tax. So just want to quickly share that screen. And there we go. Okay, so let me get my glasses on. Good. So the go-to report in Xero for me is the profit and loss report. And I will always advise my clients, go to the profit and loss report, because that tells you the story, you know, your financial performance during the course of the year. So I'm just going to last financial year, because that's a scenario I sketched here, and that's usually at year end we end up with these questions. So that's now last year, or end of March 2022, and end of the year, this is now typically the financials, the profit and loss report, and it indicates that the company end up with a net profit of $155,000. But as you can see there, there's this shareholder paid himself or herself a shareholder salary of $50,000, and obviously PAYE was already deducted, so they've already got to pay tax on that. But the concern now is there's this additional profit, so that must also be taken into account for tax purposes, and that's the reason why you might end up paying additional tax. So that's why it's so important to perhaps throughout the year monitor, you know, what's going on here at the bottom line, the net profit. And yeah, you can make provision by increase your PAYE salary during the year if you say you're not paying yourself enough. Yeah, increase your PAYE salary that you then make provision for the tax payable, and that will, the more you pay yourself on that, the less this will become. So your profit will become less in the company. So you basically just then take the money and pay tax on it. Just remember that if you just take drawings from the business, it's not reflected in your profit and loss report. That's a balance sheet item, so it won't have any impact here. So yeah, this person might have taken, let's say, $100,000 of drawings, but it's not reflected here. So I just wanted to explain that. Great. So what I would do is, now you're in this scenario, and you want to just estimate what's my tax. And you can do that at any stage during the year. You can see, let's say you're in May and you're in this scenario, or in June or September, halfway through the year. And then you can already see what will then be the tax implication at year end. So you've basically only paid yourself a salary where you've paid tax on $50,000, but the balance of $155,000 you haven't paid tax on that yet. So you have to seriously start making provision for that. Easiest way to do that calculation, and that's my go-to, what I do myself, because I'm a bit lazy as far as that's concerned. I don't want to do all the figures and so on. So I go to the calculators. IID is making it easy for you. So I just type in Google, search IID tax calculator in New Zealand, and there you see it comes up there. Click on that, and boom, there you go. And there's the income tax calculator. That's on annual income. And yep, next, easy. And you specify it for a company. And obviously, this is now, we're going to specify it for an individual. If the company is 28%, so that's easy. But let's say it's individual. That's always more complicated. And the tax rate is for the 2022 year. And so obviously if we look there, we now have to, you will be taxed on that 50,000 plus the 155,000. That's 205,000 less the tax that you've already paid. So let's say you've paid already 10,000 there. So we actually deduct the 10,000 tax already paid, and you'll see what's the balance. So just for clarity there. So for this calculation, we add the 250 plus 155. Let's say $205,000 just for this calculation. So we put in there $205,000. 5. Say next. So you see the tax on 205 is $60,000 approximately, and let's say on the 50,000 you've already paid 10,000, so you can deduct it from that 60,000. So this means that at this stage, or if this is year end, that there's an additional $50,000 tax to be paid, and that's why you will end up with an additional tax bill. Obviously, the scenario will also differ if you split between two shareholders. Then you want, a single shareholder now moves into the top bracket of 39% there. So yeah, there's tax structuring. I always like to work on worst case scenario, but this is just for to explain the scenario here for you. I hope this makes sense and clarify the reason why you might end up at year end. Even though you've paid yourself a PAYE salary, you still have tax to pay because you have to pay tax on the additional net profit of the business. So yeah, that's me, and hope this clarifies the matter. And yeah, catch you later. Cheers.